Today, I interviewed a 25-year-old millionaire who has over $20 million in investment properties. We talked about how he was able to get to where he is now, how he finds his deals, and how he self-manages his Airbnb business. We break everything down step by step. Enjoy the video. Make sure you guys smash that thumbs on up and subscribe so you guys do not miss any more content. Other than that, let's get right into the interview. Today is a day that we are honored with a very special guest. You guys probably have seen him on TikTok. You might be following him on Instagram. He's one of the top real estate moguls, gurus, whatever you want to say, teachers, and was being able to help me be able to put together my real estate portfolio. I'm really excited to be able to present him to you. Blake, how you doing today, buddy? What are you up to?
Mr. Dekmar, thank you for having me. Thank you for having me. Thank you for having me. I can't thank you enough. You have been one of the goats of this space, not only just online creator space, but the trading world, the entrepreneur world for a while now. So it's great to get in front of your audience and hopefully share some free knowledge.
Yeah, no, absolutely. I really appreciate it. I mean, there's so many people that want to get involved in real estate, and I think we can both agree real estate is one of the greatest ways to generate wealth, not only just for yourself, but generative wealth, you know, for families to come, for your kids. For how did you get involved in real estate? What was so attractive to you to get involved in real estate at such a young age? Because I know you've always had that drive. You've always had that passion. I've seen you post videos of you when you were a teenager saying, hey, I'm going to be able to make millions. Was it always real estate that you wanted? Or was there maybe something that you went down first that you're like, this didn't work out, and then you discovered real estate?
Yeah. So for those of you guys that don't know my background, I'll just give you a little brief summary. I started I've always been an entrepreneur, right? So there's a million things that I did beforehand. I knew that real estate, after speaking with a lot of, I ended up working at this entrepreneurship center, and a lot of the people that were going in there working on ideas and stuff, they were already crushing it with real estate. And what I learned about real estate was it's a get rich slow game, or at least it used to be. But it was a damn near a guarantee that you would eventually be rich at some point in your life, because there's so many different ways to go about it. Over time, properties appreciate in value. You can pull that money out. You have tenants paying off your rent and paying off your mortgages. And so other people are just making you rich, right? Otherwise, if you think about it, if you're just renting properties your whole life, you're just making somebody else rich. So I knew that was where I wanted to end up. But there's a couple of, things that I didn't understand when I was getting started, which were, how to get started, right? Finding a mentor, how much does it cost, where to start, someone says do commercial, someone says do single family, someone says do Airbnb, so there's a million ways to be successful in the business. And I think that that's where a lot of people get tripped up, right? You hear people saying, all the different ways that they've got wealthy from real estate, wholesaling, flipping, right? A million different options. And so it's easy to get pulled in a lot of different directions and hard to figure out which one's the right one. But for me, I started in the stock trading world. I started one of the largest, online trading communities. It was huge during the COVID times. And, it just I enjoyed trading, but and I was making a good amount of money, not just from the trading, but from the business side of things. And I began investing in real estate with that money, because one of the things that you'll learn with real estate investing is it is possible to pay $0 in federal taxes if you buy enough real estate. So the way that I saw it was this: I'm making money from my job or my business, and I can either not invest in anything, not buy anything, and have to pay half my money in taxes at the end of the year to the government and just throw it away, or buy assets that produce cash flow, that build equity, that appreciate in value, and it'll save me money on taxes. So for me, it wasn't just a win-win. It was a win-win-win-win-win-win-win. And then the biggest win of all for me was when I learned about Airbnb investing, and I took that cash flow from just a little bit of money to enough money to retire my family, and so on and so forth.
Wow. Yeah. I mean, I thought you came up with a lot of good points there. I think one big thing that really a lot of new traders can relate to is the fact that we all want to get involved in real estate, just like we want to get involved in stock trading. But you say, okay, I want to be a stock trader. Okay, what do I do? Where do I go? Oh, I want to get involved in real estate. Yeah. It's like, okay, boom. I don't know what to do next. So what would you say is probably those next steps? Where would where would an investor want to go? Is there a starting route that people should take, or should it be like, hey, if you want to do commercial, you got to learn about commercial. If you want to learn about Section 8, or is there a better kind of starting route that people can be able to grasp, maybe able to understand how real estate works better?
I would say the best starting route, and this is my opinion, but I watched all the YouTube videos. I listened to all the audiobooks. I listened to every episode of the Bigger Pockets podcast, the biggest real estate podcast in the world. And what I found was I was still in this stage of analysis paralysis, because in real estate investing may end up being some of the, it can be a high ticket type of investment, right? Like, buying a car or buying a house. Those are two of the biggest expenses you may ever have in your life, whether it be an asset or liability. So truthfully, I started paying mentors, because the way that I see it is this. Yes, you have to do the background research to kind of understand what route you want to go down. But before I did Airbnb, which is where I really found that is where I want to be, I did single family investing. I did Section 8 investing. I did multifamilies like duplexes, triplexes, so on and so forth. And I didn't like any of it, but I didn't know it until, I didn't know until I did it, that I was like, okay, well, this doesn't make as much money as I want to. And I need to, I really want to go after cash flow. So with that being said, for me, the biggest thing was finding mentors. And I literally just paid mentors. I'm like, hey, look, whether it was a coaching program, whether it was a hands-on hand-holding type of thing, for me, the biggest thing was I need somebody that can show me the ropes and give me 30 years of experiences, learn stuff that you've learned, losses, lessons, and condense that and give it to me in hours worth of conversations. So if you can buy somebody's 10,000 hours, that quote from Kobe Bryant that says, or it's either Kobe or Tiger Woods, 10,000 hours makes you an expert. I haven't put in the 10,000 hours, nor do I want to right now. So I can buy somebody else's 10,000 hours, and there's always a price. So that's what I would say is find a mentor in a space that's doing something you want to do. The biggest question you have to ask yourself, guys, when you're trying to figure out a mentor in any space is, are they living the lifestyle that I am trying to achieve? Because if they're not living that lifestyle and they're not making the money that you want to make, then why would you listen to a fat person tell you how to lose weight? Right. So that's how I always see things.
Yeah, no, I definitely agree with that. And I mean, that's a pretty good example on, how you stated. It's just, even for, yourself or myself, we both teach. And the thing is, I've been trading now for the last 9 years. I've put in 9 years of work, and that's why when people want to be able to learn how to trade stocks, I can teach them right away what is right, what is wrong, so they don't have to go through the same mistakes that I made. I went through so many trials learning how to trade stocks because I didn't have the right guidance. I didn't have the right mentor to be able to teach me. A lot of times people just sign up to whoever has the most followers and hope that they have some sort of amazing outcome. It still comes down to putting in work. You want to be able to learn from the right people, but also have that mindset that you are willing to work and willing to be able to show up every single day. And that's the type of person I know you are, that you are willing to show up every day, put in the work, but also be able to enjoy the fruits of your labor. So let's say someone's listening to this right now, all from scratch, all from start. They have $10,000 in their account. Is that enough? What should they be doing? What should they be looking for? You are a person who loves to be involved in Airbnb. Airbnb, you've mastered it, you understand it. $10,000 in their account. Should they be looking at Airbnb arbitrage? Should they be looking for a single home family? Like where would the route be?
Yeah, absolutely, absolutely. Yeah, so I was going to say I have a presentation too that's pretty cool I could kind of show, but this is also a pretty good number to start at. So let's just say that you guys are at $10,000. There are a couple different ways that are creative that you can invest in Airbnbs, and most people think, oh, I'd have to have $40,000, $50,000 in furniture and all this different stuff. Let's break it down. So if you had $0 to your name, which I know. Some people are in debt from college stuff. I got out of college, I had $55,000 of debt. So it was kind of difficult for me to start scraping together money until I started my business. If you have $0, there is a style of investing that we call co-hosting. Now, there is a chance that you know somebody or could go find somebody out there. It's not too difficult. Go find somebody out there who owns an investment property that is not utilizing it on Airbnb or on a short-term rental website. Whenever I say Airbnb, guys, just think short-term rentals, medium-term rentals. It's just Airbnb has just kind of become the Google, right? Like the verb that we use. So, but there's a good opportunity that, hey, Bobby and Sally's, that's my buddy's mom, they have that house in Newport Beach that they go to twice a year and they never use. Okay. You can approach them with a zero risk type of investment from your angle. It's obviously a risk to them, but it's a zero risk investment from your angle, and it's $0, which is co-hosting. And you go to them and you say, "Hey, look, Bobby and Sally, I love you guys. It's great. We've become great friends over the years. look, I've been into this real estate investing style called with short-term rentals. I think that your property would be a fantastic fit. It's making you $0 right now. I can block off the days that you guys want to stay there for sure. And then the rest of the time, I will manage it completely. It will be a hands-free investment for you guys. I will manage all the bookings, all the cleanings, all the maintenance, anything that comes up, I will handle. And and then I'm just going to take 20%. So 20% of whatever we make in gross, and I'll give you guys 80%. That's probably going to be $7,000-8,000 a month. Are they going to say no to $7,000-8,000 a month? The trick is you have to build up. You have to have enough trust. They have to know, like, and trust you, and have some confidence in you that you're going to execute the plan. How are you going to execute the plan? Well, you got to do the research and know what you're doing before you get into it, right? So co-hosting, you're going to have to. There's, a million free resources out there on how to how to co-host a property. It is very, very simple, and again, it's zero risk for you. If the property doesn't get rented out, yeah, maybe it burns the bridges of the relationship, but at the end of the day, you're doing enough market research on this property beforehand to know, very within a couple of dollars range, how much this property is going to make for you every single month. So that's with $0. Now, when you get to this next step of about like $10,000 saved up, then this is when I recommend what's called Airbnb arbitrage. Are any of you guys familiar with Airbnb arbitrage?
I've been able to watch you, and I've learned a lot of everything I know from you. So I love that.
Cool. Yeah. So Airbnb arbitrage, guys, this is a very, very cool investing model. In my opinion, it's one of the best ways to get started with real estate investing if you have a little bit of capital. So the way that it works is this: you are renting if you've ever rented a property before from a landlord to live in, then you've already done half of the steps. The second step is going to be get their written and legal agreement to sublease their property as a short-term rental. Now, you're probably asking yourself, why would a landlord ever do that? Why would a landlord ever let me sublease their property when they could do it themselves? There's two reasons. As a real estate investor, I can tell you, number one, they don't want to. And number two, they don't know how to. What do I mean by they don't want to? Well, when they bought that investment property, they didn't think that they were going to be running a business. Most people buy investment properties because they want to get paid $200 a month. They want their mortgage covered, and they want to be hands-free, and they don't want to be bothered, right? This is a business. We are providing a service to people, right? This is a hospitality business. And so with that comes dealing with shitty guests, dealing with people that, may be upset, having to troubleshoot problems. So number one, they don't want to. Number two, they don't know how to. What do I mean by that? They don't know how to stage a house. They don't know how to take professional photos. They don't know how to set up a listing on Airbnb. They don't know how to do pricing strategy. They don't know how to set up home security. So these are two reasons why a landlord wouldn't do it. And this creates an opportunity for you to step in, rent their property, and sublease it on Airbnb. So for example, if I found a property that was a 1-bedroom, 1-bathroom apartment in St. Louis, Missouri, and the rent is $1,200 a month, and our expenses out the door when it comes down to like Wi-Fi, utilities, trash, all that stuff, let's call it another $250, $300, whatever it is. So we're out the door every single month, $1,400 in expenses. Now, if you can go charge $150 a night for this Airbnb and rent it out for 70% of the month, which is 21 nights, then you're making, you're making close to, $3,000 something. I can't do the math off the top of my head, but you're generating about $3,000 in revenue. Now, all you got to do is subtract that revenue or the expenses from that revenue, and you take the profit in between. Let's call it $1,600 a month or $1,700 a month. That is profit in your pocket on a home that you don't even own. Now, just imagine doing that at a bigger scale. I have some houses that now make $15,000, $20,000, $30,000 a month in profit. Okay. So that is what I would do with $10,000. The other thing that you can consider doing, it is a little bit more dramatic, but in my opinion, and I don't say this lightly, I do believe that this is the best entrance into real estate investing that you could possibly do. Most people don't have the balls to do it. And it's not that it's risky. It's that most people don't want to live in, you have to sacrifice for this model. So this is when what's called house hacking. Okay. So we're going to be buying a duplex, a triplex, a quadplex, whatever it may be. Now you may be asking yourself, how could I do that with $10,000, $15,000, $20,000? Well, you use what's called an FHA loan, which allows you as a first-time home buyer in the United States to put down 3.5% of the purchase price. So if you just do the math, I'm pulling up my calculator right now, 3.5% times, let's say we found a $500,000 duplex in in Idaho somewhere, that's $17,500. That's the money you'd have to put down on that property, right? But now and then what you do is you live in one of the units and then you rent out the other one or the other two units as a short-term rental, not as a long-term rental. This is going to allow you to not only be living for free because the money that you're cash flowing covers your monthly expenses, but because it is on Airbnb versus being a long-term rental, you're also going to see monthly cash flow. So you're paying down your mortgage every single month, you're living for free, and you only have to do it for 1 year. Then you're cash flowing as well, so you're making money on top of it. The only problem is you can't just go. You're not going to go live in a. You're not going to go find a $500,000 duplex in Newport Beach, California, in Manhattan Beach, in New York City, right? You got to be realistic. But there are a lot of places that people would visit and would travel to that you could also live in if you're willing to live there. It doesn't have to be ghetto. It doesn't have to be junky at all. These properties are out there if you look for them. And so you just do that for 1 year. And then now you are an owner of a duplex or a triplex. You hold on to that thing as long as you absolutely can. You pull out. You can refinance it later on. And once that thing is refinanced, then you can go, people don't know this, you can go use that FHA loan again. And so now you can go buy another duplex or triplex and keep doing this process over and over and over until you have this mini real estate portfolio that's cash flowing 6, 7, 8,000 a month, and now you've replaced your 9-to-5 job. You can be a full-time real estate investor. So I know that's a long-winded answer, but I just want to give you guys some different ideas to think about in terms of options you have when you're investing with short-term rentals and with just a little bit of capital.
No, especially anyone with a small account could easily start there. But do you honestly think real estate is a large account game? Like if you have a bigger account, are you going to be able to be more successful, or can small account traders be able to build on up? What would be your idea about that?
Yeah, I mean, so there's a two-part answer there. It doesn't, just because you have more money to invest. If I come with $500,000 to invest because Uncle Johnny died and left me an inheritance, that doesn't mean that I'm going to be a better real estate investor than you. It may mean that I have more options, more opportunities. But as a small real estate investor as well, you have access to something called OPM, or other people's money. So don't forget, just because you have $10,000, $20,000 in the bank, if you have a strong business model and a strong pitch and you're able to build relationships, then you can leverage other people's money and buy them out. So you could have access to $1 million of other people's money if they believe in you, if they trust you. So I don't think that money is a limiting factor at all, but I definitely think that you could get wealthier faster if you had more money. But no matter what, you can get started with a little bit of money and still crush it. Just don't have a short time horizon. Don't see me, my Airbnb business, like last month, we finished at $260,000 in revenue. It took me time to get there. Right? Like it took time to scale to get there. I didn't start there. I started with one property just like everybody else would. And I just went all in on something that I thought was going to work, and it happened. But to answer your question, you can still absolutely crush this with a small account and grow.
That's awesome. That's huge. I think I want to ask a question that I feel like a lot of new investors always think about. You got a good deal, you have a bad deal. What makes up a good deal? What makes up a bad deal? Like, what am I looking for when I'm thinking about buying a property? How do I know this is something that's going to be able to produce for me?
Sure. Am I able to share my screen?
Yeah, absolutely.
I figure I could either tell you guys or I could just show you. So this is probably the easiest way to show you. So guys, follow me on this for a second. If you are investing in the United States, the great United States of America, I know we just had our holiday, our happy birthday. So shout out to the US of A. So this is a website I use, Zillow.com. There's a bunch of different websites you could use, but all we're looking for is a property to either purchase or rent. So let's just say, for example, I was looking at Savannah, Georgia. So let's go look in Savannah, Georgia. I'm going to change this because we're talking about, potentially buying properties. Change it to a 3-bed, 2-bath. I want it to be a home. I don't really, maybe I don't want it to be multifamily. Just zoom in. Okay. We'll just take the first house, for example. This house is, to me, that's really pretty house, $425,000. You wouldn't really have to do too much to it. It looks pretty turnkey. You can tell that the property is kind of way out here. You can see this on the map, left side. I'm guessing that everybody in Savannah wants to live over here since there's so much congestion, and that looks like the downtown area. But let's just see how much this property would make on Airbnb. And So I do this. It's a 2-step process. Takes me under 2 minutes to tell you how much a property is going to make. First things first, you're going to go to a website called airdna.co. airdna.co. Now they have a free tool on the left-hand side. I obviously pay for an expensive version of this thing just so I can help all of my students out because I have thousands of students. But when you click the rentalizer tool, which I'm going to show you in a second, it's going to show you how much the property should generate in revenue based on current supply and demand and also current properties making money. As you guys can see here, one of the things that it'll tell us right away is the average occupancy rate, the average revenue, and average daily rate of this market plus a market grade. One of the things that I'm looking for, guys, when I'm trying to evaluate a city to invest in, when I'm looking for gold mine Airbnb properties, is the occupancy rate over 71% on average? And do we have over 250 active rentals in that area? Those are the two things that I care about. So obviously we check both the boxes here. As I'm scrolling down and looking at the map, we kind of hit the nail on the head. There's not too many investment properties out here. Looks like maybe not the place that people are wanting to stay, but either way, let's go find out if this property is a moneymaker or not. So as I go back, I'm going to click this property again. I'm going to highlight the address here, 24 Harvest Moon Road or Drive. So highlight, copy. It's a 4-bed, 3-bath. I'm going to go back over to Rentalizer. I'm going to paste it in and click search. And as we can see here, guys, it tells us that we should make about $71,000 a year in revenue, $320 a night on average with a 61 average occupancy rate. Not terrible, not the worst in the world, but how do we know, guys, if this property is going to make us is it a buy or is it not? Because all these numbers don't mean anything unless we can get a rating. This is when my calculator comes into play. So I have one for both Airbnb arbitrage and for purchasing properties. It's very simple. You just kind of fill in the blanks here. It takes you 2 seconds and it'll tell you if the property is going to make you money or not. So our purchase price, guys, $425,000. So on a $425,000 house, I would expect that you could probably get this for $399,000 just based on, you never pay full price for a house, especially in this market. My interest rate right now is probably going to be like 7.5%. Furnishing cost, I think it's turnkey, so we'll just say $10,000, but I'm certain it's turnkey based on how they have it staged. The only other thing that we have to change here is what is the average daily rate? And the average daily rate we saw a second ago, we go back here, was $320 and the occupancy rate was 61%. So I'm just going to plug in 320 for the daily rate and 61% for the occupancy rate. And I was making some tweaks to this yesterday. So this is actually, it's not actually a bad buy, but I was tweaking around with this calculator trying to figure out on a new property I was looking at. And I was trying to go above a 20% cash on cash return. Anything over 15% cash on cash return, in my opinion, is a good buy. But I was again tweaking the settings. But with my calculator, it'll tell you if it's a bad buy, good buy, great buy. What it's telling us right now though is this property is going to make about $6,000 a month in rental revenue or $71,000 a year in rental revenue. On average, our net monthly return is going to be about $1,600. Not terrible, not amazing. Now, let's just imagine, though, for a second that when we did our research, this thing came back and said it made $500 a night on average at a 61% occupancy rate. This would have been telling you, guys, we have a banger alert. And 58% cash on cash return, $4,800 a month is what you'd be making a net profit. And so this calculator just really makes it easy with the combination of these 3 tools, how you can do a very back of napkin, very close guesstimate to know, is this going to be a property worth pursuing, whether it's buying or doing rental arbitrage.
Woo, man. I mean, it just already just dropping some gems right here. I mean, you're on the stream for, I don't know, 15 minutes and you're already doing this? Yeah, I know.
So when we start pulling out the gong.
Yeah, the gong right there. I like it. See, so, I mean, just being able to get some of this, already, just is so great to be able to soak on in and be able to understand, what makes a good purchase, what doesn't make a good purchase. Just want to throw out there real quick. What markets avoid right now at all costs? What are your sleeper picks right now?
Okay. So some of the markets to pay attention to, the ones that I call them the boom and bust markets. So if you go look back in 2008, the markets that got hurt the worst and have boomed and bust they call it boom and bust. Like during COVID, when prices were going crazy, these things went nuts, right? Nuts. And then now we're seeing the biggest declines in them. So the ones to pay attention to over the course of probably the next 12 to 24 months is going to be the Sun Belt region, which is going to be like your Phoenix, Scottsdales, Glendales. Pay attention to Las Vegas and the outer areas of Las Vegas as well. Pay attention to the Austins, the Nashvilles, any of these markets that got too hot, they have to come back down. Guys, just like anything with trading, when you're looking at a trend line and you see a stock like a Zoom during the pandemic levels, when at the top, top of the pandemic levels, this thing was, if you go look at the trend line, it is so far up. Like the RSI on that thing is screaming. It's like, holy cow, freaking bought.
It's
overbought, right? So just like with anything, it's guys, stocks, real estate, all these prices, any kind of equities, they have an equilibrium point. And so what goes up must come down. And usually the higher, harder that it goes up, the more dramatic that it comes down. I'll just tell you guys the markets that I'm investing in right now and also where I'm looking to continue investing. Couple of different spots. I don't think that you're going to lose in the panhandle of Florida. In my opinion, it is one of the best markets to invest in the whole world. The reason why I say that is because, and I have a thesis, I call it the country boy thesis. I haven't really shared this with too many people before, but the thing about the country boys is, which I'm from California. When I travel, last year I did Europe, this year I did, I'm doing Hawaii. Like I go all over to different places. The thing about the country boys, and people from South, Louisiana, from Texas, from Tennessee, from all these surrounding states of the panhandle of Florida, they love to go to the same places every single year. So as far as people can remember, they've been going as a tradition with their family for every vacation, every holiday to this area. Like let's call it Destin Beach, Miramar Beach, Santa Rosa Beach, Panama City Beach. I don't know if I said that a second ago, but there's a grip of these cities on this like 1 hour long trail, 1 hour long freeway that people go to damn near year round. There's about 3 to 4 months of an off season, but the on season is insane. You're talking 100% booked out. So I like investing there because you're getting beachfront properties or like damn near close to the beach or in coastal cities. They have always trended in an upward direction over 10-year periods of time. And you're going to crush it with making money there. I also invest in the Great Smoky Mountains. The thing about the Smoky Mountains is you have to understand there is 14 million people that visit there every single year. It is in a national park. It is the second most visited national park. So people will continue to go there and, for generations and generations. The thing is there's also there is an oversupply of properties there. So why would I, as a real estate investor, invest into a place with an oversupply of properties? Well, that doesn't mean that there's an oversupply of great properties. There's an oversupply of shitty properties. So if you can come in with a great property and have some kind of different amenity, something that is unique, like a differentiator, then you can dominate in a market where there's a lot of crappy properties and a lot of people visiting. So that's kind of my thesis on that. Some other markets to look into as well. I really love Sean's market, which I would love, Sean to share more with you guys about his real estate journey so far. Utah, some of these up and coming states. I have my eyes on New Mexico as well. I think New Mexico is one of the last frontiers with both investing and with traveling. There's some beautiful spots like Taos, Santa Fe, Albuquerque. So those are kind of some places I'm looking right now. And then I'm also, haven't made an announcement on this yet, but I'm currently under contract for a big project in upstate New York in the Catskills. Under contract does not mean 100% that I'm going to close. It just means that we've signed the dotted lines and that we're doing due diligence and all that good stuff now. So with that being said, those are the markets that I'm looking at.
No, those are, I just love, the great explanations, going through it all and, just really helping out all the traders that are listening. Yeah, so Blake was the person who got me involved into. I got a few phone calls with Blake and just saying, "Hey man, what do you think about this property? What do you think about this property?" And finally, I was able to step into the game, and I purchased my property out in Salt Lake City, Utah. And the reason why I picked it out there is I'm always saying to myself, where would I want to go? Where would I want to go? Where would I want to visit? Personally, I don't want to buy a place that I just feel like is in the middle of nowhere. that's not going to have anyone want to go there. Sometimes people say, oh, I have a great deal in South Dakota, but who's going to want to go to South Dakota? So the thing is, I'm saying to myself, hey, people like to go to the beach, they like water, and people like to ski. And the thing is, beach properties, water, they do get a little bit more pricier. So I was saying to myself, I want a nice luxury property. The reason is I wanted to go with a little bit more upscale clients. I really didn't want to have to go with lower scale, maybe a little party damage, maybe not the type of clientele that I wanted to kind of go to. I wanted to cater towards a little bit, higher on up. So I really couldn't, I feel like, find that type of property at a beach where I wasn't going to be constantly on an anxiety attack. So I said to myself, instead of again water, let's go ahead and look for the mountains. I really just wanted to follow where does the money go. Tons of rich people love to go to the beach, and tons of rich people, you see them skiing out in Aspen and doing all this stuff during the wintertime. So I started researching and said to myself, where is the number one ski resort in the country? Last year, the number one ski resort was out in Park City, Utah. It's also one of the biggest ski resorts in the entire country. Last year, Park City, Utah also got the most snow. They're still open at this time. You can actually still go ahead and ski even right now as we're in July, which is absolutely insane. The runs are still going. So that has been the number one indicator for me on getting over towards Park City and buying out near Utah. Not only that, but I'm also following businesses. California, we all know tons of businesses, Fortune 500 companies have left. We've seen tons of companies head on over to Austin, but we're also seeing at this time Goldman Sachs go out to Salt Lake City, Utah. Facebook, Meta just opened up in Salt Lake City, Utah. UPS out in Salt Lake City, Utah. We have tons of these huge companies now heading out into Salt Lake City because they don't want to be in California anymore. So we're looking for neighboring areas outside California where these companies are now getting out of California and starting to establish themselves. So this is absolutely huge for me. And this is, so far, my rentals, I actually just put it on up in June. So in June, I just started putting mine on up, and I'm currently at $27,000 in profit at this moment. Now, this is purely profit. This is after, again, I pay off my management fee. This is after I pay off my taxes. This is paying off absolutely everything. I don't do anything whatsoever. This is 100% passive income. And when you say, oh, I don't do anything whatsoever, I literally bought the place. I have a property management team, and I do nothing. Other than that, I just received checks for $27,000. Here are all my bookings. You could see my first booking was 24 days ago. That was my first booking that I had, and that was all the way back in June at the end, and it's just been lighting up ever since. And these are just because I'm using these techniques that Blake's talking about right now, punching in the numbers, using the calculator, going over everything right here. So you can actually see my calendar at this time, and my calendar at this moment, we're doing at least a minimum, because the house is a little bit on the rather large side as well. We're doing at least a 3-night stay at most. So we had the rest of June booked on out since we put it on. July, unfortunately, we can't do any more July because it just doesn't fall into that 3-night minimum. We may actually be able to get the one final one between the 25th to 27th. And then August, we have a couple little spaces left at this time. But the fact that we're already getting booked out in December, we're already getting booked out in October, and it's not even hot season yet. When I said I'm going to buy a house out in Utah, I'm expecting that summertime was going to be the slow time. And once we put it in June up, booked out all of June. July, we don't have any more spots left in July. August, we basically have 2 weeks left that you could get in July, and the money is going to be coming in the winter time. So you need to understand your off season and your slow season. Right now, it's the off season, and within the matter of 10 days so far, or whatever it's been, 20 days, I'm currently sitting with a $27,000 profit, passive. This is why real estate, I think, is so amazing. So at this moment, I'm paying, again, my mortgage. My mortgage for the next 4 months is already paid off, and I'm not even at the winter time yet. So to me, it took me a very long time to be able to actually purchase this property. Not in the fact that it was, okay, I could just go out and buy any sort of property. It was, I wanted to make sure I did it right. And I think, all of us have that, especially making it your first or second property. You really want to make sure you do it right. You're putting in this investment, and I am so blessed and guided that I looked at so many different, markets, and that market didn't work out, or this one didn't work out, or this one didn't work out, or Blake said, hey, Sean, I don't really think that's the best deal. And then be able to finally find, this property. It's okay, I feel like, to wait for that property that really stands out to you until you have a good deal. I think it's okay for you guys to be able to call up a real estate agent and say, I like this house, but I only like it for this number. And if they say, hey, let's put an offer, see what happens. If they say no, that's okay. So it's okay to be able to negotiate. It's okay to get declined. It's okay to wait for that perfect setup. How many times, Blake, do you throw out, any sort of offer that gets denied and you're just kind of waiting for that one to actually work out?
Oh my gosh, dude. I've been told no probably if we could measure it, 100 times more than I've been told yes on anything. And it's, and I'll tell you the truth. One of my first real estate mentors told me, if you're not making an offer that makes the the seller mad, or makes your real estate agent mad, then then the offer's not low enough. So like literally, sometimes I'll send a text. So one of the things I'm trying to do right now is help my little brother. I want to buy him his first property, his first Airbnb. He's graduating college, and I just think it'd be an awesome way to get started. With investing. Not going to be a huge house. Get him a $250,000 house. Put down 20% and let him manage it. It's going to be hands. I'm going to make him do everything, but he will have a good kickstart. So I find this house that's it's like $380,000, and it's in Central California. It's at the in the foothills of the Great Sequoia National Park. People visit there all year round, and it's a kick-ass market. So I find this property. I have an agent in the valley, and I text him. I said, tell him, just because I knew that they were going to get pissed about it. I'm like, tell them 230,000 all cash. That's almost 50% less than what they're offering. And I just throw the all cash in there, because if they actually accept it, then I can pull together the cash to make it happen. But you start with an insulting offer, seriously. And then it kind of opens up the conversation for like, okay, well, maybe my property's not worth that. Another trick, I'll just tell you guys one trick of the trade that I learned that is so funny, but it works, is I give, when I'm making offers on properties, if I'm not just going to say $250,000, I'm going to say something like $252,967.48. These people never see offers like this. It's always like round numbers and very flat numbers. And so this is what I just think in my head, but I started having a better hit rate when I was buying properties when I started doing this. And I think it's some kind of psychological thing where these guys are like, what the hell does he know? Like, is this really what the exact value of my property is? So
it's like,
kind
this
of a funny
guy
trick,
knows
but
something that I don't.
yeah, this is the exact house, price of my property down to the penny. But yeah,
that's awesome. That is great. I mean, that's what I went through as well. Throwing out some numbers and getting a lot of no's, and eventually you will get that yes, unless you're just constantly just throwing out the most ridiculous offers where no one would ever accept it. But it does, that's a huge thing. It opens up the conversation, right? It opens up the conversation, and usually you'll always be able to get at least some sort of wiggle room. I've been able to learn. What do you think the person should put down? What's the magic number here? Is it 10%, 20%, 50%? Should we pay it off all at once? Like what's going on here?
Look, everyone has their own thoughts on this. I personally, it depends on how much capital you have available. I think that when you're starting out investing, you want to put down as little as possible. It's not going to allow you to cash flow as much, but it's going to give you more capital to go acquire properties. So if you think about debt as most people, if you listen to the who am I thinking of? Who's the guy that's always telling people don't pay everything down with cash, even though he's worth like $700 million. Dave Ramsey. Everyone know Dave Ramsey, right? Don't use credit, don't use debt, pay everything down in cash. Well, if I were to pay everything down in cash, I would not have the portfolio that I have. It would be a joke. And the reason why they say that though is because most people are dumb with their money. And I'm no disrespect to anybody. I'm not calling any of you guys dumb, but most people that call into his show, they're like, hey man, I got $600,000 in debt. I got this degree that I don't use. I'm making $45,000 a year and I drive a 6 Series BMW. What do I do? Well, yeah, you probably shouldn't ever have a credit card if that's you. You should probably never go take on any kind of debt at all. But the way that I see debt is, and how the rich get richer is by using other people's money. So if you tell me that on a $600,000 house, I only have to go put down 10% or $60,000 instead of 20%, which is $120,000. And that allows me and I have another $60,000 still that I can go invest and go put down 10% on another investment property. So, am I going to cash flow as much? Probably not. But maybe across those two properties, if I'm barely starting and I don't own a property yet, then do what I was telling you guys in the beginning, which is use an FHA loan, go get a duplex and house hack the thing. There's a million different ways to get started. But I think if you have the capital, personally, from my risk standpoint, I prefer. I think that I have about 25 to 30%. I think the number's closer to 30 just because people have been paying it off for me. But I think that I'm in that range of, I put down on average about 25% down on properties that I invest in. So that's a good sweet spot for me.
No, I put down 30% on that Utah house. So that's why I was, kind of curious on, where you're at. But what's the goal here? Is the goal to, buy one property and try to pay it off as quickly as we can? Or is it like when we have these properties, are we basically trying to break even until we're 45 and then we basically have all these properties that we're just generating profit? Are we trying to get these properties for retirement, or are we trying to get these properties for like income right now? You know what I mean? Like, I feel like a lot of people are probably saying to themselves, can I buy a property and just live off my property right now? Or is it, hey, you're going to break even probably, or you're going to just pay off the mortgage, pay off whatever you need to do. And then by the time you're 40, 45, then you're basically set for life. What's your idea of what you're looking for? Are you trying to live off these right now, or are you trying to just be set up by the time you're 40 or 100 millionaire?
Cash flow is the only thing that I care about. Cash flow. Appreciation is not a guarantee, right? Appreciation is not a guarantee. No matter what anybody tells you, if you bought a house because in Southern California, because for the last 100 years, every single year, prices have gone up, and you say, this is why I'm buying this house. It doesn't make any money right now, but it's going to be worth more. And we could get in World War III next year. And who's to say that property is going to be worth more money in the next 10 years, right? The only thing that matters in my investing thesis is cash flow, because my goal is this, guys. I've done the grind. I love trading. In fact, I can't wait to get back into trading, more actively. The problem was for me is I felt like if I was, when I was trading every single day and I started kind of falling out of love with it, I was trading my time in exchange for money. For me, it was no different than, a previous job where I had to go clock in to make a certain amount of money. I was up at, my name on social media is Mr. 4 to 8 because I was waking up at 4 a.m. for pre-market and going to bed at, 8 p.m. when after hours closed. That's where I got the name from. So for me, it was like, I want to buy back this time so I can do the things that I love, so I can make trading, more of a passionate hobby and get back into the fun side of things and not feel like I have to make this money in order to support my living. So for me, cash flow is the only thing that matters. Is this property going to make me X amount of money per month? Does it check all these different boxes? Because I know that it's going to give me the tax write-off already. I know that my tenant's going to be building off paying off my mortgage and building equity. And so is this buying my time back? And so now, like my Airbnb portfolio on average, even though it generates about $175,000 per month on average in revenue, it generates me about $70,000 to $80,000 a month in profit. Okay, so I'm basically hands-free. I have an in-house property management team now where I don't have to really do anything anymore. So now I've bought my time back. That's $70,000, $80,000 a month. I didn't have that before. And now, my mom is retired. My dad's retired. They both work for me now, just, in the business. I can retire at any point in my life. I can go travel at the drop of a dime. I can go buy any house that I want now. And that is supporting my lifestyle. And so that's the number that matters to me. The consistent, I started sleeping better at night. And I'm sure that you can attest to this. I started sleeping better at night, knowing that I had a damn near guaranteed amount of revenue or of passive income coming in every single month, knowing that it's going to cover the expenses and and my lifestyle. Would you agree?
No, I mean that is absolutely huge, and I really can agree with this. I was saving up for my property, and now even just in the summer for it to be 2.5 weeks in, and I'm up $27,000, and right now we're projected that I'm going to be coming on in probably around $160,000 in profit after the whole winter season comes on through. That's me not doing anything. So the thing is, let's say worst case scenario, right? Worst case scenario. All of a sudden, I'm trading bad, not doing well trading, taking some time off, don't know what's going on. I'm still making $160,000 from nothing,
Right.
And it's like that's the ultimate goal right here. So I know the average millionaire is going to have roughly around 7 different incomes, 7 different streams of income. Mm-hmm. We want to be able to make sure that these streams of income as well are healthy incomes. We don't want to just have random incomes where maybe we only get it sporadically, or maybe it's a smaller income. I know that this house is producing, and I know it's the off season right now. It's producing. I'm going to be able to go to sleep, wake up every single night, be able to wake up the next day, and I'm going to be able to say to myself, hey, I'm still going to be able to make over 6 figures a year just from being able to save up, put down this, and still be able to make a profit. So I feel like a lot of people, and it's kind of crazy too, because my dad has a best friend, and he has a house down in Myrtle Beach, but he actually doesn't rent it out whatsoever, and he's only there for a little bit. And I say, why don't you ever rent it on out? And he's just like, I really don't know how to. I really don't know too much about it. But he could be making an extra $50,000, whatever, a year just by having someone be able to manage it for him. So that's why there are a lot of these properties that, if you have, especially a family friend that's maybe a little bit older, a lot of them don't know what they're missing out on. A lot of them just don't understand, hey, we can rent this out and we could be able to make you a profit off of it. You keep 80%, we keep 20%, and we could be able to make a great business partnership just like that.
Yep, absolutely. And just to touch on one thing, I think that is super important here, guys. And you may hear something different, but I'm just going to tell you the truth of the matter. You never, ever, ever, ever want to pay off a property in cash, because that money is just parked in the walls. It makes zero sense. The only time that I would pay off a house in cash is if I was making so much stupid money that I would pay off my personal primary residence. And that would only just be for, just because, like, all right, my house is paid off. I don't have a mortgage anymore.
I did that.
Other than that, and yeah. So that's the only time that I would do that.
Just I don't got to worry about it. You know what I mean? I'm going to live here the rest of my life. I don't got to worry about it.
Absolutely. I think that's completely fine. Investment properties, though, you don't want to pay off. So why do I say that, guys? Because if you think about a house as like a piggy bank, when you go put 25% down on a property, your money's not going, your money's not going in the trash. It's not going to taxes. It's tied up metaphorically in the walls of the house. It's just equity that's, it's with the bank. And so in theory, how the game should work is you should, whether it's doing long-term rentals, short-term rentals, Section 8, whatever it may be, however you want to invest. I just share what works for me, but there's a million ways that work for everybody else. What you want to be doing is building up, having your tenant pay off your mortgage, right, every single month, and then you want to collect that cash flow. You want to, ideally hold on to that property as long as you can, never selling anything if you don't have to. And then what you do in a couple of different years is you do a cash out refinance. You're able to pull out all that equity from that property tax-free. Okay, tax-free is the key word there. You pull out that money tax-free, and now maybe you put down $50,000, or I don't even know what price we were talking about earlier. Let's say that you had $50,000 into it. You held it for 6 years. You paid off, it was paying off the mortgage, and you were cash flowing. Now it's worth, now you're able to, and the property went up $300,000 in value. You're able to go pull out that $300,000 when the house reappraises in equity. So now all of a sudden you went from a $50,000 investment that you didn't have to really dick around with for a couple 6 years, and it took you a second, but now you've got access to $400,000. Now $400,000 is 20% of buying. I don't even know what that is. 400,000 times 5. I can't even do the math in my head, but
it's okay, math.
2.2. Yeah, 2.2 million, 1.8 million. I don't know. I can't do the math in my head. Long story short, now you can go buy another, $1.5 to $2 million worth of properties. So that is the game. And then you're just back to 20% in that property. But Blake, why would I want to, if I was at 50% in equity in that property, why would I want to do that? Because look at how much cash and how much leverage you just gave yourself. The game of life and the game of business is leverage. Leveraging people, leveraging relationships, leveraging money, leveraging capital. And so if you can play this game at scale and leverage other people's money and this imaginary made up appreciation type of money, pull it out, go buy more properties. And now, my friend, you just bought yourself more real estate, more cash flow, and more time back in your life to do whatever the hell it is you want to do.
No, absolute. Another banger alert. Another banger. Let me ask you this, because I know this is something that you hate, basically. What is your thoughts on, you get a property, you have it all set, you're ready to rent it out, but you're not near it. You're not near this property, as in you can't drive to it. Yep. You have to, or you have I feel like a different choice on a property management. You don't want to spend 25% giving away your income. Like, what are the options here? What are the options to be able to have a property that you like out of state, you can't drive to, but you still want to be able to manage it and not just give away like 25%? Do you have to get a property management team? Is there a way around this? Like, what's the option?
There is a way around this, correct? So if look, my hatred towards property management comes from a place of getting burnt by property managers when I first started. You're paying 25. I was originally paying like 25% to this company that was calling me still all the time when stuff was going wrong and overcharging and overbilling for stuff. And by the end of it, I'm like, man, I'm barely even cash flowing. I might as well just bought a long-term rental and save myself the headache. And then so I started figuring out, okay, well, how do you self-manage these properties? But without I want to, again, like, I don't want to create another job for myself, but I don't want to give away 25% of my money. So here's how it looks. It is a combination of hardwares and softwares and people. So, I always say this, there's a couple of different things you need in order to set the pricing of the property and do it the right way. I use an app a web app called pricelabs.co. It's a software that does dynamic pricing for you based on, it understands the supply and demand in the area that you're at. And so it is able to dynamically price the property. Like, hey, if it's Super Bowl weekend, the house doesn't need to be $500 a month. It recognizes it and it goes to $12,000, or $1,200 a night, right? Or $500 a night to $1,200 a night. So it recognizes that. The next thing you need to have is, in order to kind of manage from a distance, is you need the Ring doorbell set up or the Google Nest set up. This is not only to protect your guest, but this is to protect your property and make sure that people aren't lying about what they're doing. If John and Kate actually show up with 8 people, even though they said there's going to be 2, then, you could say, hey, look, you guys lied. We're going to charge you per guest. And, and this is, you can get them in trouble, whatever you want to do. On top of this, the real money comes, in my opinion. So the smart locks, you need to have the smart lock, which is, I use the Schlage encode or the Yale August lock. You're able to control these from your phone from anywhere in the world. They hook up to Wi-Fi. You can change the password. You can let people in. So now you have this machine that allows you to not have to be on premises to handle business, right? But you're asking yourself, well, Blake, what do I do about, what about the managing the cleaners and, the handyman, and what if stuff needs to be fixed? Okay, so if you're going to self-manage, then this is a business. You yourself or somebody that you hire, look, a lot of people don't talk about this, but using, if you have a good, a girlfriend that's on board, a wife, a mom, a dad, or somebody that is also down to help out while you're building this side of your business out, which a lot of people have, and they don't talk about it. I have it. I had it. My mom, I had my mom helping with the guest services side of things. So my mom's job, and now that's what she does full time for me, is the property management side, which is communicating with the guests and communicating with the cleaners and handymen. That's it. That's all they got to do. Everything else is handled, but you have to, either yourself or somebody on your team needs to be able to communicate with the guests and the cleaners. The cleaners are the core of your team. They are the heart. This operation does not work without a good cleaning team that not only knows your property, they can have an open line of communication that documents everything, anything that gets damaged, they got to tell you. Anything that needs to be restocked, they tell you, hey, toilet paper's out. Hey, we need this. Hey, the light bulb's out. Fix this. They are your eyes and ears on the ground. They are your on-site property managers per se. And then you buy yourself back that extra 20% in, revenue that you were giving away off the top to these property management groups. Is it a little bit more time and a headache? Sure. Is it worth it for you? You have to answer that question for yourself.
Hey, coming down to the end here, we're going to give you a couple little just rapid questions. You don't got to go too in depth, but let's see what you got. All right. Number 1. How to check if an area is approved for short-term rental.
The best way to do it besides Google is to call a real estate agent in the area. No, don't just call one of them, call 5 of them. So Savannah, Georgia, what I found out about Savannah, Georgia, that market we were looking in earlier, is yes, they have short-term rental regulations and restrictions. But if you were to just check the Google or the website, they're going to tell you the city website, they're going to confuse you all over the place. This zone, that region, this street, that street. Call local real estate agents in that area. Say, hey, my name is Blake Roach. I'm an out-of-state investor. I'm looking to invest in short-term rentals there. What are the rules and regulations, and where should I be looking to invest? And they will tell you right off the bat. If they're any somewhat knowledgeable about it, they'll tell you what's kosher and what's not.
Should I buy a luxury property or use the money to buy 2 properties?
I prefer luxury. Luxury. I like luxury.
Best banks you can finance. Is there like a go-to bank or a go-to place that you use?
So for me, I just use whoever is willing to give me money. Like, I go hunting, shop rates. Don't just stick with one person. Go shop rates and then go back to the other guy and say, hey, this guy gave me 7.5% interest rate. Can you guys match this? This guy gave me 7.3, and just go back and forth because they want your money. They want your business. So don't just go with the first person that gives you an interest rate.
Would you ever buy property for college kids? like college rentals?
Yeah, I would. Just knowing, you got to just obviously know what you're getting into. I'm not going to be emotionally attached to a frat house.
I know.
So,
I can't think about it. There has been too many times where I walk into like a college house and someone would be like, Sean, you think you can punch a hole through this wall? And I'm just like, like, no, man. I can't personally do that. It would be too tough.
the good news is with college, like I definitely wouldn't be an Airbnb style of an investment, but the good news is with them is mommy and daddy are making sure that rent is paid every single month. So that's the good part. Good part.
Any problems you ever had with squatters or break-ins on vacant properties?
No squatters, no I need to start knocking on wood. Is there wood nearby? No squatters and no vacancies. Really, with any of my properties, the only biggest Airbnb headache that I have is that I bought a house that had a pool on the roof, and for 2 years the pool was leaking and we couldn't even get it rented out. And I ended up I lost hundreds of thousands of dollars on that deal. I ended up I'm able to make it back now that it's rentable, but for that time period, trying to figure out why the house was leaking, it was a nightmare. We couldn't rent a house
figure it out.
Leaking.
There's a pool on the roof.
yeah. But we tried like everything, resealing it, unsealing it, it just everything under the book, and it just never stopped. So word of advice, don't buy a house with a pool on the roof.
Hey, I'm trying to buy my first home. I was going to buy for me and my family, but should I get a rental property first? Should I get a rental property first or a house for me to live in first?
Buy a rental property first every day of the week. Rental property, and don't feel bad about renting as long as you need to. I am a multimillionaire that still rents their primary house. So for me, I was actually living at my parents' house and I owned 25 investment properties. So no excuses. Don't feel bad about anything. Invest first, and live like they won't now so that you can live like they can't later.
Have you ever used a self-direct Roth IRA to buy any properties?
I have not. No, I have not. I know what it is, but I have not. But
gotcha. Little shout out real quick. Day Trade Professor with a $100 donation. Shout out to, again, the Day Trade Professor, buddy. Always, again, just one of the most stylish guys. Maybe the top creator with some of the best hair matched up with Blake. All right?
Oh, Professor, man, I absolutely love you. And yeah, thanks for the donation. I don't know where the donation's going, but you are the absolute man. And you've, I believed in you since day one, man. And I'm just very happy to see your vision coming to life.
All right, guys. Well, I think we're just about set coming on up here towards around 12 o'clock. It's been an absolute honor, blessing to be able to have this, presentation today with Blake. And we just want to say, thank you so much for everything that you provide. Blake, tell the people where they can find you.
Sure, guys. You can find me. The easiest place to find me is going to be on Instagram at Mr428, MrFourtoeight. Maybe Sean can type in the chat if you guys are able to see it. But yeah, so at Mr428 over there. Any of you guys have any questions? I do have a coaching program. I do help people out all the time. So if you're ever interested in working with me directly and having me hold your hand through this whole process, just shoot me a DM, say handhold, and I check all my DMs, I read all my messages, and I'm happy to help you guys out.
Hey, well, thank you so much, buddy. I appreciate it. I know everyone else here, really appreciates you, and thank you for just all the education you provide. Thank you for helping me out, of course, and look forward to linking up sometime in the future, buddy. Playing some golf. That swing's a little brutal, but we'll get you dialed in.
Hey guys, can I get everyone get some fires in the chat? Type spam F in the chat for Sean, because we respect Sean so much, the absolute legend. Sean, thanks for hyping everybody up every single day in and day out. Absolutely respect your work ethic, your grind. You're a truly one of a kind guy, and there's a reason why you're building something so special here with Tradecaster and your community. So thank you for having me on, guys.